Well, that was very short-lived. Uh, yeah, made a video, right around here, and nice. We've already given it back. And this is exactly why I have $18 strike covered calls, because SoFi loves to do this shit, dude. I mean, I did it right here. Went from 15 all the way up to about 20, and then came right back down to 15. Then went all the way back up to like 1950 or something. And now we're back down into 1650. I was getting a few comments saying, bro, your strikes are already in the money. Like, what are you gonna do? Well, now they're $1.50 out of the money. So this is how the game works, guys. I mean, just because we get a good 2 to 3 day rally doesn't mean that the bottom is in. It does not mean that. So we just got to play the long game. These contracts are for December, and I am slightly hedging. I did buy some puts right before the close. So, and I have been doing that. These past couple days. I've been hedging with buying puts on SoFi, and we're already up like $959. So, and it's baby hedges. I'm not really doing any more than like that was my biggest one. And but most of these are like 10, 15 contracts at a time. And I'm a big wuss when it comes to buying puts, so I always close them super early because I don't want to lose money on them. I know they're a hedge, so you're kind of supposed to lose money, or worst case scenario, it actually works out tremendously, but then the rest of your stuff takes a hit. So yeah, I've been buying puts, and we've made a lot of money on them. $959. We're up $1,400 this week in realized gains, or up almost $17,000 year to date. And my calls, they have gotten I think I had $90,000 of market value the other day, maybe like 3 or 4 days ago, my last video. And we're up $12,000 on these covered calls, and now the value is down to $65,000. So just in the last 2 days, we've gained about $25,000 of premium. It was premium that we were already down on, so we're still technically in the red in premium. But I'm letting these bad boys expire in December, so absolutely no rush here. I definitely don't want SoFi to crash as hard. I wish it would be a little more, stabilized, kind of like how it kind of was here. Wasn't moving too much. These massive swings where it moves like over $1 a day, that does not work well with my December calls, right? So the further out in time we go, like if we're in September or October, I'm going to have a lot more premium gain from Theta. So Theta is going to help me, as the months go on. But if SoFi's, swinging $3 in 2 days, that does not give me enough time for Theta to help me. So that is the unfortunate part about these violent swings in SoFi. But yeah, I mean, I'm glad I hedged a little bit, almost made $1,000, and I'm sure these puts will be up in the morning since SoFi's already down 1.2% in the after hours. See how it works in the morning. But I will more than likely add more contracts depending on stuff. I was looking at the RSI on the 1 hour, and it was 19. So I thought that was a little bit crazy. So I bought all my puts back, and I'm going to wait for hopefully the RSIs to go back to, 30, maybe even 40 before I get back into some hedging. But that doesn't mean it can't go lower. I mean, I'm kind of just hoping I hedge and time it perfectly, which is very, very difficult to do. Probably will not succeed, but I'm glad I was able to make some profits from it. But yeah, man, hopefully SoFi doesn't keep going down. Hopefully this was kind of it. Hopefully it'll cool off and stay in this $16 range, because if we break 15, things could get ugly, and I would probably have to roll my calls out. But I mean, we're doing pretty good, man. we're doing pretty good as long as SoFi doesn't keep dropping like a rock. Back to back 5 to 6% days, definitely no bueno. I need some stability here, SoFi, so my theta can work for me. I might roll my $20 cover calls into these 18s as well, just to capitalize on premium, because like there's no guarantee that SoFi is going to be above $18 in December. I mean, majority of us would think so. I mean, obviously we would probably assume it's going to be over $20 in December, but honestly, you never know. You really just don't know. So honestly, I'll collect more money if SoFi is at $17, because then I will not sell my shares for that little bit of a loss, and I'll just collect all the premium up front. So, I mean, best case scenario, on December 18th, the market closed, SoFi is trading at like $17.80, like right under where my shares would get called away. That would be best case scenario. And then I could just sell like, maybe $19 covered calls weekly or every other week or something, 2 weeks out. And hopefully my shares will get called away then. But that would be like absolutely best case scenario for me. But I will continue to hedge SoFi for as long as I feel like I need to. But like I said, this is for the long game. And just because we rally, for 2 days, 20%, you see how quickly things can change, right? So, with SoFi, you never know. And the same thing is going on with Hood. I think Hood is literally doing the same shit. I think Hood's getting hit a little bit harder because of crypto. I mean, look at that. Hood went from 73 all the way to $94. So it jumped $20. What percent is that? I mean, yeah, you're looking at a 28% rally. And now it's already fallen $13. And like I said, I think it's because crypto. This name it has similar moves as SoFi, but crypto is a larger part of their business compared to SoFi, because SoFi has just started rolling it out in January. Robinhood, I want to say it's around 15 to 20%. So people are still trading crypto, but it's just the volume is not as high as it is in a crypto bull market. They're going to be trading a lot more. But Broadcom, double beat on earnings. Let's look at it. So estimated was 232. They came in at 244. Beat there. And I do believe they beat on revenue as well. And so I can pull this up, right? I'm not entirely sure how to pull up the revenue, but pretty sure they did a double beat, and their stock is down 13.5% right now. That is absolutely nuts. I feel like the market's just waiting to tank tech, because tech has been going crazy. And CrowdStrike as well, down 10% in the after hours. So, would you look at that? They beat Q1 guidance, and they raised their guidance. And they announced a 4-for-1 stock split. And their stock falls 10%. So you really just can't win sometimes. That's why it's very, very dangerous to play earnings. It's just honestly smart to stay on the sidelines. Or maybe sell options to capitalize on the premium. But even then, like cash secure puts, man, if you would have sold like maybe the 700s or something, you'd be technically in the money right now. So it's always risky, but what is life, What is life without risk? Netflix, honestly, bro, if I was full cash right now, I would probably be nibbling in. If I was full cash right now, I would probably nibble into SoFi, Hood, Netflix. Honestly, probably Amazon as well, because I feel like Amazon has not had the rally that everyone else has had. Like Amazon has always been, not always, but Amazon has been like low 200s, maybe close to the mid 200s, and Amazon's still there. So I think Amazon's still at a decent opportunity, and Google is down from its 400 and something 408 highs. I think Google, not a terrible place. I would be starting at 27 PE ratio. I think I'd probably be nibbling in Google as well, and Meta. I'd definitely nibble in Meta as well. But that's probably about it. A lot of stocks have gone up a ton. Nvidia, I don't know what is going on with Nvidia. It actually looks pretty good on the 1 year. But Nvidia has been stuck around this 210 area for a few months, it seems like. Oh, I'm sorry, maybe not. Maybe I'm just tripping. But Nvidia is struggling compared to AMD and MU and all those other ones. Well, that's where I'd probably be nibbling at right now if I had capital. Obviously, I do not have any capital. So, there's that. Unfortunately, I wish I was participating in this AI boom rally. Hopefully, you guys are participating and you're not being a big dum-dum like myself. But come December, cross my fingers that my shares get called away or that SoFi is very, very close to $18 and that they will be called away soon. And I will be beginning a long-term portfolio aside of a trading portfolio, but my trades will not be like this. I will be, long story short, I'll be trying to stay out of margin. I will not be doing this stuff. So it will still be very entertaining, but it will not be balls to the wall like this, because this is definitely it's annoying because I feel like I have to manage it a lot, because if I don't, I could risk a margin call. So I'm like constantly having to look at it or think about hedging my play or think about rolling my options, and I just don't want the headache of having to look at it every single day and all that crap. So come December, hopefully I'm out of this trade and we're going to begin a new journey for 2027. A slightly safer journey, no margin. Still going to be selling puts, selling calls, all that jazz. But I will introduce a long-term portfolio where I will be depositing a certain amount of money every month. I haven't decided yet. Kind of depends where I'm at in 2027. But I would say at the minimum, probably $250 a week at the bare minimum. But cannot wait for that. But I'll see you guys in the next one. Peace.